So a very excuse me. So on a weekly basis, the parabolic stop and reverse already triggered a few weeks ago. So as long as we see prices above this parabolic stop level, we should favor the alongside of bonds, in my opinion. However, bonds are priced inversely to interest rates, and interest rates are nearly as low as they can go in a practical sense. So I don't think this is something where we should be looking at long-term bond holdings, but I think we should probably be looking at this as a time to exit bonds as we see prices moving up here, and then if we see the next parabolic weekly time frame sell trigger, my personal opinion that would probably be a good long-term exit signal for bonds if you have bond investments and that type of thing. So that is my opinion on that. It's just based off of the historical patterns during deflations and bear markets, and based off of where interest rates are currently. I think it's unreasonable to expect to have major long-term appreciation of these type of bonds from this level. There is tremendous potential long-term downside potential in the bonds. It's just going to take a significant break of support, like we just saw in gold or something to that effect, to really lead to that type of decline in bonds. And thus far, it's been able to hold support. It's held that 2011 and 12 support. It formed a bottom here. Currently in 2013 above that support level. So this would be the support level that I would believe would be a possible indication that if this harmonic pattern fails and if this support level does not hold, this may be the breakaway point for the downside or bear market to begin in long-term bonds. So that's my take of what's going on there in bonds. So that's really all of the markets I had planned on covering in this update. I think most people probably follow the stock market most closely. There are some long-term cycles that would suggest we see both weakness in both stocks and commodities into this fall prior to a possible rally or move to new bull market highs in either of those markets. And the particular cycle I'm speaking of is there is an analog to the 1948 stock market bottom and commodity market bottom with the price action to follow. And so there's a cycle that has been followed relatively closely since the end of the prior bear market environment and the new bull market environment in stocks and commodities. So that would anticipate that we probably see some seasonal type of weakness in stocks and commodities into the fall here. And so I think that once we get some more concrete indications that correction is underway in stocks, my personal opinion would be to not really anticipate a brief correction in stocks. I would look at anticipating a larger scale correction that is maybe larger than anything we've seen over the last couple years. Whether it turns into a bear market or not, I don't know, but that would be my anticipation. And obviously we need to have objective indicators that help us manage that expectation and not get out of line. But I think if we see weekly or monthly parabolic type of sells trigger in stocks, then we should respect the downside until at a bare minimum the weekly moves back into a buy signal. So that is all for this update. If there are any questions about any of these markets, just leave me a comment either on the blog or on YouTube, and I will try and get back to you or cover those in the next update. That's all for today. Have a great day and all the best to your trading.